Hello and welcome to the congregation of fabulous trader people who have decided to click on this video and watch it today. For that, I thank you, and I promise you I will do my very best over the next few minutes to entertain, educate, and enlighten you on all things market relating to take you from where you are now and try to point you in the direction of where the promised land may be and get you to be that trader that you've always wanted, the trader that you know that's buried deep inside of you just waiting to come out. I'm going to try to do my best. Before I get started, let me make a couple of nice cheesy announcements. If you need help with your trading, I suggest you go to tradewithdoug.com, browse through the private community, browse through the inner circle, find something that fits your style. Let us help you get to the next direction. Also, let me remind you that the penny pound is now open. It's been open. You already know that if you've watched in this video because I say it in the beginning, but it's just rolling. We're doing very well. More and more people are coming in. It's only micro cap stocks and crypto trades. So it's something that we're doing completely on the side. It's not my main source of business, but it's a free chat room. So for you guys out there, just learning the basics of technical analysis, learning how to find and scan and where you should be entering your stocks or your trades or your cryptos or whatever you got going on, make sure you visit. All the links are down in the description box. So today I will begin with a series of educational videos titled Why You Suck as a Trader. So part one, we're going to talk about something very special. And each week I want to highlight on something that I feel newer traders or struggling traders are overlooking. Because let me kind of give this to you in a rundown of from my experience, how I've witnessed it. When we come into the markets, we have a tendency to feel that if we learn a chart pattern or a setup, that this setup is going to continue to work the same way in every single market, or what worked yesterday or the day before must be able to work today. And that's not correct, because one thing that we're missing or that we often overlook, especially, I'm not saying that you guys are, some of you might already be doing this, and I applaud you on that, but many of you may not be, and this could be why you're struggling. Because a pattern is just one piece of the puzzle that you need to be successful. It's a gauge of price and price action and how to judge whether or not the participants are interested. But we also have to take into consideration what's going on in the entire universe of the market. How is the market reacting? What kind of market cycle are we currently in? And when you put one of these pieces of the puzzle together with your technical analysis, you normally achieve extraordinary results. So if you continue to just, let's say, for example, buy the dip. Well, that was a fantastic strategy for you in 2021. If you're doing that in 2022, you have a much different result. All that simply means is the market itself has changed. And if you intend on staying in this business for a long period of time, it will always change. It will constantly change, and you will need to change with it. Now, your core strategy itself doesn't have to change, but the way that you implement it does. So here's one big reason why traders suck. And what we're going to talk about today, a very simple element for all of you, and that's the element of time. Everything in our world, when it comes to trading, operates via time. There are times throughout the day that things are more likely to happen or less likely to happen. So real quickly, if you're going to buy a breakout, which I don't recommend, but let's say that's your strategy, or buying dips is your strategy. When you choose to do that, the time of day at which you see that pattern or you get that signal is dependent on when you actually see it. Does this happen first thing in the morning? Does this happen in the middle of the day? Does this happen late in the day? So I'll give you this rundown here real quick. Now, as always with everything we talk about, is there something out there that's 100%? And the answer is no. Nothing is perfect. But as traders, what we deal with is probabilities. What is most likely to happen in the majority of scenarios? So if I do something 20 times, what's going to be my average result? Not what works once. And this is what I'm not picking on guys. I'm just trying to help you become a superstar. If you went in here last year and you got into this business and you're tossing money at all these microcaps, remember the AMC video I did yesterday? You're tossing money last year at all these microcaps, Tiger, DMTK, all these other Bitcoin plays, minor stocks. You were making bank in February or March. If you've been using that same strategy, you're probably not trading anymore because that doesn't work. That was just one period of time where that particular kind of setup worked, where that type of stock was running, and normally that doesn't happen. So everything that we do is time-based. Now, to give you guys just a simple, straightforward rundown, the times on the bottom of my screen are Pacific, so I'm going to be 3 hours behind. I'm going to try to translate this the best I can into East Coast, New York time, let's say, market time. From the time the market opens up, from 9:30 till about, I'd say the first, let's say 2 hours, but I don't even really think it's quite the first 2 hours. Let's say 11:30, right prior as you're going into lunch. This is when I would say about 90% of all the activity in the market is going to happen. This is where the height of the volume is. This is where the height of liquidity is. This is where the emotional level is at its highest. So this is where things are most likely to happen. So if you're looking at making a move in the market as, let's say, a day trader, even a swing trader, you're wanting to pay attention very close to that session and how something behaves. Now from there, what will normally happen, whether something moves up or something moves down, it will enter a period of like a freeze, somewhere around, let's say, even 11 to probably the very last hour, roughly 3 p.m. In this time frame, it's often been referred to as the doldrums, where the volume is much lighter. In fact, in the old days, places like Goldman Sachs, JP Morgan would train their interns how to trade during lunch. So if you're making decisions and you're making moves in there, many times those moves that you see have a high degree of falseness because it's the time in which they're being traded. It's the volume in which is happening into that instrument that you're trading is much lower. So the accuracy of your technical analysis or your percent win rate and all that stuff gets skewed, not because of the pattern, but because of when you're choosing to trade the pattern. And then, of course, during the last hour, you will see a spike in activity. And you can see that through the bottom of every day. Where is the volume? This is something that's really simple. Every volume in the morning is peaked, flattens out, peaks at the end, and every day you have the same sort of up and down volume pattern, okay? Now here's what you need to know about that, or some things that I can share with you that I think will help you. If you're really looking at getting perfect prices and you're a short-term trader, the first thing I want to talk about why time is important is because time itself is highly emotional. And I think for a lot of us traders in the beginning, we discount the emotional level of the participants that are involved in the market. We look at something and we never can really, when we're looking at technical analysis, it's also a gauge of the emotional level of the participants. If I could draw an emotional chart of what the mentality looks like of the typical trader, it would be the peak as the market opens, and as the rest of the day, it would begin to tail off. Now, there's several reasons for this. In the beginning of the day, there's a lot of news that is issued. People look at high of day lists, low of day lists. There's earnings, there's Fed news, there's political news. There's all kinds of news from overnight that's blasted right in the morning. Now, what we don't know is how the market will react to that news. So some people take it upon themselves to make their own calculations, and they all pile in as soon as the bell rings. Now, I always recommend it to most people that, especially if you're new, you should sit out between the first 10 to 20 minutes of every session, letting the dust settle. The reason for this, especially on Mondays, so let's talk about emotions. I once looked at this chart. The most bullish day of the week on a chart, polled by a broker for all of its investors, is Sunday when the market's closed. Now, why is that? That's because people are the most optimistic on Sundays. And they're the most enthusiastic on Monday mornings. What do you want to do on Monday? You want to hit your goals. You want to get off to a good start, just like the first of the year. You want to get off to a good start. You want to be disciplined. You want to right your wrongs. You want to make up for Friday. It's just like in the world of gambling. I'm not saying I relate trading to gambling, but what's the most betted on sports events? Monday Night Football, because all of the losers from Sunday are trying to make back their money on Monday. So this whole thought of the emotional participants on Monday morning are at this euphoric level. They just want to hit goals. And when you're at this emotional level, what we have to understand is when we go through emotions like fear, anxiety, and greed, if we really peel back those layers, what is that? Emotions put you in the vulnerability of removing your intelligence. So all of this technical analysis and all this studying you're doing and all this smart stuff you're trying to get ahead with the market, you blow that out of the water when you start acting on emotions. It's like I said to my members, it's the abandonment of intellect. You're studying and you're learning and you're training to do something, and then all of a sudden you step out of that discipline and you just go full on emotion. Now, as the days go on, all this news gets digested. Traders either blow up in the morning or go full tilt. Some already hit their goals, and things start to settle in. Now, I want to show you what I'm talking about here. You're going to see a few things that happen on a routine daily basis that give you the edge when you combine your technical analysis. So I'm just looking at Tesla here, spanned over, this is 1, 2, 3, 4, 5, 6 days, 6 trading sessions each day. Now you're going to see a pattern that's repetitively happening. Forget about flags and breakdowns. A rhythmic pattern every day. Every morning there's an impulse to the upside as the day begins. So every day there's this period within that first 2-hour window that I'm talking about that Tesla, the stock, wants to move forward. Now, for whatever reasons, we can blame it on news, we can blame it on speculation, we can blame it on the company, whatever. It doesn't make no difference because you're going to see it happens in more than just this. Every morning there's an impulse of trying to move this higher. Sometimes that move is subtle. Other times it's expansive. So just by looking at that rhythm, if you're going to pick a side, which is very important, right? As a trader, getting on the right side in the first place, you would want to look for long opportunities in the morning. If you were a short seller, that's not when you want to push the button. That's not why. And it's harder for short sellers to be effective in the morning because emotions are so high. Greed is so high. So you see this impulse. Now see what else you get here. I mentioned something about those first 2 hours. Normally when something goes higher in the first 2 hours or lower, within that first 1 to 2 hours, that move becomes more and more difficult to continue. So if you want to go in the same direction, most of the time you will be wrong, at least for that day, if you're day trading. If you're swing trading, then maybe that's different, but you still could get a better price in most cases. Now, the reason for that is based off of what I just said, the emotions and time. So after 1.5 to 2 hours, most of the market participants are either exhausted, all of the sellers that wanted to sell or all of the buyers that wanted to buy have dried up, and now all of the assets that you're looking at either trade sideways, ramp and camp, wash out and go sideways, and sit there throughout the entire lunch session. Now let's see what we have here. On this day right here, Tesla had already turned the corner in the first 1 hour here. So let's just talk about pivots. We already know it went up every morning, but every pivot here. You had a pivot right here in the first 2 hours. This one just probably, I don't know, this is like 10 minutes here. This one lasted a little bit longer, probably about 2 hours here. Fade right here around the 2 hours. So if you look between 8 and 9, at the bottom of my charts right here, let's say around the 8 spot, okay? I'm just going to circle this. This would be approaching the lunch session on the East Coast. If you look at this, it has moved downward almost every single time at that hour. You have gotten a pullback or the beginning of a pullback as you have approached 8 o'clock Pacific, which is 11 o'clock Eastern. So let's erase everything right now and just think of rhythm for a second. Every morning you get an impulse within the first 2 hours. After that, you get some sort of a pullback. Now, sometimes it's just a subtle pullback. Other times it's a very deep pullback. Like, look at this, it's repeating itself over and over again. So just by looking at this and looking at the element of time, you could just quickly make a small rudimentary type of decision in your trading and say, I will only buy this in the morning. If I don't buy it in the morning and I had to do something, I would short it in the afternoon. That's it. Because that's normally what happens. So in a lot of cases, the other would happen. If it sells off in the morning, it has a tendency to want to bounce around that same time frame. Now, it's not just Tesla. I'm going to go through a bunch of different stocks I got here on the list, just picking up randoms, non-earnings related. You're going to see the same thing. Many of these instruments will peak out in the middle of the day. If they go very vertical in the morning, they'll have a very hard time making fresh highs after, let's say, 8 o'clock, 9 o'clock Pacific time, which is 11 or 12 o'clock. So a rule of thumb, or where we're going with this here today, is I got to wrap it up because I'm just getting winded. I don't want to keep talking forever. The element of time. When you choose to do something matters. Now, the second thing, which I don't really have a whole lot of time to talk about today, is range. So when you take your technical analysis, you put that into time, then you put range on top of that and say something is trading 3 to 4 times above its range. What I'm saying here is it's far more difficult to get a move. So let's say you are a long trader and you want to buy bullish stocks and you want to do that during the day. The chances are you need to do that early in the morning to get the most volume and the most impulse to get you what you need out of that move. If not, you have to do that towards the close. If it already moves away from you and becomes parabolic or vertical or extended, 9 times out of 10 or 8 times out of 10, if you buy it, it's going to be very difficult to get a lot of reward out of that because of just the time of day. It's going to be hard to attract more buyers at higher prices 2 hours into the session. So in most cases, it just matters not to do it at that. Same way if you want to reverse that strategy, hence the check mark strategy that we teach in the inner circle. It's time-based, based on unnecessary morning panic or flushed out panic moves that sink into a support level, then rally later off that same premise. Now, there's a lot more to it, but part one of why you suck as a trader is time. So from here on out, base those times. You'll see in the chart where there's ample pivots at certain times, and there's no secrets. They're always going to happen around a certain level. Take your technical analysis and your strategy, combine that with the proper time, and you'll see some better results. So I'm going to cut it here at this point. I want to thank you guys. Let me know down in the description box if you're using time. Let me know your element of time. Let me know how you are doing as a trader. We'll continue to build on this week after week. We'll talk about range. We'll talk about setups. We're going to talk about all of this as we go through the series of why you suck as a trader, because you really don't suck. You just need a little bit of help. That's all we really need. We're really this close. Just need a little bit of help. So thanks for watching the video. Like and subscribe. Until next time, take care, trade well. I'll see you soon.